All right, everybody. Well, we're live with Matt Parry from the Good Crisp Company. Matt, thanks for joining the show.
Thank you for having me.
Absolutely. Do you mind giving the listeners just a little, intro to yourself, the brand, and just, like kind of the elevator pitch?
Definitely. So, as you can hear, I'm originally from Australia, moved to the US with my wife and my three daughters. Actually, two years to the day today. It just came
Oh,
up on my
cool.
phone as a photo, as a reminder. So, moved here 2 years ago to focus on growing our business, which is the Good Crisp Company. We are a shorthand version and essentially a better for you alternative to Pringles and to other canister chips. We're in the can, we look like that. We taste actually better, but we take all of the nasty stuff out. So we're non-GMO, we're gluten-free, we're all natural flavors and ingredients and those sort of things. And we're sold just under 10,000 grocery stores across the country, from national with Whole Foods, Walmart, CVS, a lot of places like that, and continuing to grow.
Yeah. No, that's awesome, man. Excuse me. Um, the first time I saw your product, originally it's exactly what I thought of. It reminded me, obviously, I've spent a long time at RX Bar, so it reminded me just of the same thing that Peter and Jared did when they, saw protein bars filled with shit, and they were like, we should make one that's not. So
Yep.
that's exactly what you guys did. Do you mind? I would love to go back and understand the beginning, like how you. I don't know if chips were a big,
Sure.
thing of yours you were into, or like how you came about, starting this.
Yeah, definitely. So it was about 7 or 8 years ago when I first started the business back in Australia. And my background is in CPG. I was part of a company. We imported snack brands and other food products out of Asia and things like that, and sold them into the Australian market. So I'd always been in food and CPG and launching other people's brands, and always wanted to do my own thing, but was just waiting for that sort of an idea or something that came across that I felt confident enough to really go all in on. So where it happened for me is I'm a massive salty snack guy. I love potato chips. And then I was on a gluten-free diet, really trying to clean up what I was eating. I have some food intolerances, things like that. So started really even though I'd been in natural food, probably for the first time, started actually looking at what I was putting in my body, what I was eating, and then particularly what I was giving my kids as well. As mentioned, I've got three young daughters, and obviously they eat a ton of Pringles and a ton of chips. Is
Yeah.
sort of is the case with kids. They're forever snacking. And we thought, look, we don't want them to stop eating. Like, we want them to eat and continue to sort of grow, but we've really got to think about what we've given them. So, I was eating a lot of healthier food, but they weren't eating that. They didn't have the same, kids don't have the same sort of cognitive process that, yes, this doesn't taste good, but at least
Right.
it's good for me. That doesn't work with kids. So this idea of how do I, like a lot of people, how do I sort of find a balance between those two things, and find something that looks the same, they're happy to eat it with their friends, they wouldn't really know, but I as a parent feel good giving it to them and things. So I had some contacts in the industry. There's not many people literally in the world that make canister chips, and I was sort of knew some people and was able to sort of work and develop and use my experience to come up with a product that we could then start to sell.
Got it. No, I love that. Did you like what was your like step one? I love doing this like breakdown of like going from
Sure.
0 to 1, because like I'm sure tons of people have been like, oh, I wish I could have a, Pringles can that was not so shitty for me. I would love to have something
Yep.
healthier. How did you, what was like step one?
Yeah, 100%. It's not a revolutionary idea for sure. Like, so as you said, I'm sure heaps of other people did it. So how are we able to bring it to life? I think the difference for me was the context that I had. As I said, probably most people had Googled a healthy Pringle or how do I make Pringles, and quickly realized, oh my goodness, this isn't like a bar product or something that I can, make in my kitchen and sort of
Right.
develop and take it to the market and start like that. How a lot of, peanut butters or whatever start like that. This isn't that type of product. This is, really specialized machinery, really high volumes, all of those things like that. So I was just sort of, to be frank, at the right place at the right time with some contacts that I could say, hey, I've been working with you guys. I've done a lot of business in Australia for you. I've got this idea. and was able to sort of convince them and sort of to take a chance on me, and they let me use their R&D teams to start to develop and say, hey, I want something that, is gluten-free, doesn't have GMO, we need to take this out, but it needs to taste good. That's the most important thing there. And so we did a lot of back and forth and a lot of trials, and they were really patient with me to sort of develop something.
Wow. Yeah, that's really cool. Did you so yeah, to your point, like it's not something you could just like cook up in your kitchen. So how did you start? You worked with the R&D team. Did you like actually go and, work at a commercial kitchen in Australia at first or something?
Yeah, well, that product's actually, even to this day, is made in Malaysia. So
Oh, okay.
just to add to the international flair to it. So, there's no one in Australia that makes it. There's not really any good people in America that make it. So, we had to sort of go elsewhere, and this was sort of the contact that I had. So they're one of the best in the world as far as I can tell, and I've tried a lot of product over the years. So I was fortunate to really, as I say, be with a great partner there. So, but yes, a lot of trips up to Malaysia, a lot of working with them there, and then also getting the trait what they thought tasted good with the different profiles between countries was that challenge as well. But they believed in the idea and what we wanted to do, and could see the potential of it, and were prepared to work with me.
Wow. Yeah, that's wild, man. I haven't heard of too many founders on here that are making products in a different country and bringing it in. That's definitely not a normal thing you hear of founding stories in the US. So that's pretty wild.
Yeah, it makes for a lot. So we're now, between sort of bringing over 15 containers a month now into the
Wow.
US here, into Australia and Canada as well. So it makes things definitely difficult, particularly in this COVID environment, logistically wise and
Oh
things
yeah.
like that. But as I said, we think we've got a great product, and that's what separates us. So
Yeah.
we're committed to it.
No, that's awesome. I know it's funny, at my time at RX, I was like the finance person for our export business that we launched. So I've kind of done the
Sure.
opposite, trying to get the bars in containers over to Australia. So I have some empathy for that process with you.
Yeah,
Um,
it's not as easy as you would think.
yeah,
The
I'm sure.
number of things that can go wrong.
Right. Yeah. No, it's amazing like what that takes to get a product over the Pacific Ocean and keep it fresh and good to
Yep.
go. What's like the shelf life
Yeah,
of your
yeah. So we
product?
get it here with 12 months life on it still. So
Oh,
that's
awesome.
one of the things that makes this possible as well. The canister is great for the aesthetically, but also sort of having something in a thick sort of tube like that, all sealed up, does wonders for shelf life as well.
Yeah, it makes sense. Is there I think for most people listening, I'm assuming people would love to know without, going to your website or looking this up, just like what is in your product, like that's healthy, like what's it made up of, I guess, like the ingredient
Yep,
makeup, just like a high level overview, and then like how different is that from, what's currently on the market?
definitely. So the product is essentially made up of. So we use potato. As silly as that sounds, that's actually quite a difference right there. So we don't use flour. So people say to us, well, why are you making such a big deal about gluten-free? All potato chips are gluten-free. But Pringles and other companies put flour and fillers and things like that in their products. So they're definitely not gluten-free.
Oh, didn't
It
know
is
that.
actually, yeah. And if you weren't a celiac or someone like that, you probably wouldn't know. But there's nothing there. So we just use straight potato. And it's not like a potato chip, which is a carved up potato and you fry it. This is actually obviously to get that consistent shape and the novelty factor. We use a potato flake or like a potato paste that's sort of molded into that shape and fried in that shape and things like that. So we do that. We use all sustainable RSPO palm oil on our product. And then we sort of use essentially flavoring that we sort of put on the natural flavoring. So they're basically the core things that are in our product. So what's the difference there? As I said, a lot of it is the stuff that we actually take out. So as I said, we don't use anything artificial in there. We make sure all of our ingredients are non-GMO certified. We make sure they're certified gluten-free as well. We make sure that, we have all of our certifications in place for the factory and ethical sourcing and SEDEX and all of those things as well, to ensure that we're doing all the right things by our employees and by our suppliers as well. Then on the nutritional side of things, to be frank, there are differences. We try and reduce our sugar and salt and things like that, but it's not our major focus of this product. When it comes to sort of creating product, you can there's different ways you can do things. And in my experience, and certainly with a product that's very technical like this, once we start playing around with how it's cooked or some of the technical sides of it, you really start to lose a lot of the taste and a lot of the crunch and a lot of the feel. So I made the conscious choice to say, look, we want this to be as close to the original to some degree, to use that term as possible, to keep with our sort of the whole reason why I started this, which is sort of that, a familiar form, something comfortable that kids want to eat but still tastes good. And for us, that's core. So when I look at what are the three pillars that make up the Good Crisp company, we say we're good taste, and then good ingredients, and then good vibes. And we've actually spent a lot of time around that in that order. I feel very comfortable, and we've owned it to say actually good taste does actually come before good ingredients. So, and that's similar with around nutritional panel and things like that. That taste is our number one factor. This needs to taste good. We're a snack company. People eat us because they want relief, because they want a little bit of enjoyment, because they want to treat themselves with a snack. So unless it tastes good, none of those emotional reasons of why you're eating us matter, regardless of what the ingredients say. So that's first and foremost. Then we say, okay, how do we still keep in the good taste, try and make this as good ingredients as we can? And we're frank, that's an ongoing process, and we continue to evolve that. We have core things that we won't change, like non-GMO, like gluten-free, like, all natural, things like that. They have to have that, but we continually trying to evolve and make our products and cleaner and things as well without sacrificing taste. And then the third part, the good vibes, is yes, it's what we do. So we give back 5% everything we sell to childhood cancer research, things like that, but also just about the emotional connection around, you can pick this up, you can eat it, you can feel good as a parent giving it to your kids, they can feel good eating it because they don't feel left out or things like that. And that's important to us as well. So they're sort of the three things that tie our product together.
Yeah, no, I love that. That's something I think sometimes goes overlooked when it comes to like healthier or better for you brands is taste. Like it's got to be good food. It's got to taste good.
It for sure. And sometimes you can get really caught up into this is why we're doing it, or this nutritional value or whatever, and things like that. And you can start I'm not saying we don't do it. It's just a reality. You get really into the weeds of it all and all of this, and you sort of forget to step back and say, hang on, what is a consumer coming in without all this experience and understanding what do they think and things like that? And so it is actually surprisingly easy to do to forget about the taste.
Yeah, no, I mean, totally makes sense. And I think it's really cool that you guys give back. Definitely resonate with that. I've lost a friend to cancer, and I know childhood cancer is a horrible thing. So that's really cool. Yep. Do you think, how do I want to frame this? I've asked this before. I think it's really interesting, especially for products like yours. Why do you think, big chip companies haven't tried to do something similar? You know what I mean? I think
Yep.
it's interesting because the better for you category is, across different categories is, I feel like, exploding with so many cool young startup brands that are trying to do what you're doing in other categories. Have you ever thought about it? Or, I mean, you've been closer to it, so I don't know.
Definitely. I mean, we do with our strategic sort of analysis of, hey, what does this all look like? And I mean, if we look at, say, someone like Pringles, who's a sort of, we don't see ourselves as a big competitor with them. We're totally different consumers and things like that. But just on the form factor, if we take that perspective, I mean, they're a $1 billion, and that's not $1 billion valuation, that's $1 billion sales, right, of Pringles just in the US. So, whilst we're growing and all of those things, we're still very, very small. We're sort of percentages, compared to what they're doing. And so they have things that, you look and say, hey, I could open up and sell more in China or India or something like that, and make another sort of 500 million, or I could try and sort of retrofit all of my machinery and do all these things and lose all my efficiencies and all those things to sort of cater to our consumer. And so, it's just not and I don't know all of the ins and outs, obviously, but talking to other brands and other sort of chip companies, it's more around, hey, we do one sort of thing, we do it really well. Here in the US, there's still a massive customer for, a Pringles, for a Lay's, all of those things like that. And so sort of looking through their lens, you can sort of understand a bit more about, we're not going to make those sacrifices necessarily to go after something when, to some degree, as they see, if it's not broke, don't fix it. Whilst we, coming from the other things say, hey, there's a huge market here for us that we can tap into this sort of area where no one's playing at the moment.
Right. Got it. Yeah, I know. I always think like, I've been on the other side too. I've worked at big companies, and it's probably also they see the amount of time, energy, and money it'll take to develop a product like that, and they think like, oh, I could launch a new flavor of this $1 billion product, or I could try to break into a whole new part of the category, which could undermine. Yeah, so that makes sense.
Yep.
Totally makes sense. I thought it was interesting too. I was reading about your story a little more, and I found that you're from Australia. Your product is from that general area of the world too. How did you guys like? Was there a plan early on that you wanted to like really grow the business in the U.S.? And then I know the answer to this, but I'm sure people will be interested. You're not in Australia anymore, so I would love to hear that kind of story and what drew you to the U.S.
Yeah, so like all young entrepreneurial business, we didn't have any plans or anything like that. And we still do fly by the seat of our pants a little bit there. So, I mean, I'd love to say this was all part of some master plan of getting over to the US, but no, it sort of just evolved that way. Sort of, we had the opportunity. We were struggling a little bit to grow in the US. To be frank, sorry, in Australia, there's only 2 grocery chains over there. There's a lot of competition. So we're sort of struggling to find a spot. We are still in Australia. We still sell there now, still to this day, and
Awesome.
we've actually cracked one of the supermarkets there. So it is definitely growing there. But at the time, maybe there's some other opportunities. I used to come to Expo West to have a look around and see products anyway. So I was familiar with the trade show, and I thought, you know what? Why don't I just, book a table? I think I got like the last table that was left in some off room somewhere in one of those dodgy little holes somewhere.
And it probably still cost you an arm and a leg, I'm sure.
Correct, absolutely. Particularly because I said, look, let's just take some product. I'll mock up some packaging. We'll wrap it up. I had to take it all with me sort of on the plane. Just put it out there on the table and just see what people think. Maybe there's an opportunity sort of in the US, and that's where it sort of sprung, and it sort of snowballed a bit from there. But it was just more of a, hey, let's try. Like, what's the worst that can happen? We spend $5 or $6 grand trying this. I get a fun trip in the US, and we'll be on our way, sort of thing.
Oh, isn't that funny? I love that. No, I think that entrepreneurial journey is like so important for people to understand too, who maybe want to have aspirations of being an entrepreneur. There's something to be said about just like jumping and taking the risk and trying it out and figuring it out afterwards.
100%. We always used to say, we don't want to. I don't want to die wondering. Like, if we're serious about this, like, what's with that attitude, and then what's the worst can happen? What's the downside here? Like that's what we said. It's 500-600 grand investment to just go over and see and try it, and then everything is sort of somewhat, as we develop things, sort of staged and gated process. Okay, great. We seemed like we got a lot of feedback. Okay, let's go and develop some products and some standards and come back next year and see what we can. So sort of there's a next little step there, but still not a huge investment. And it's, okay, well, we've got 1 or 2 brokers that want to take us on. Let's try it. Let's develop something, do it over there. Once again, it's not a huge, and sort of, it's not like we said, right, let's go into Walmart nationally day one and go from there, sort of thing. So, step by step, you work your way up.
Yeah, no, that makes sense. I mean, I'm assuming, people listening to this might think, that sounds expensive, especially if you're like over in Australia and you're trying to launch a product here. To kind of throw a finance kind of question at you, was your philosophy early on, did you guys, were you looking to bootstrap this? Did you guys raise money early on? How did you guys fund the beginning of this business? Because I know in general terms, it might not have been super expensive, but for just the average Joe, that might be tough to get off the ground.
True. And that's a really good point, Shane. And I think we were fortunate that I had this other business, my importing and selling business that we were sort of doing. We were able to sort of draw some of the funds out of that to help sort of do what we were doing. So I was fortunate in that regard that the other partners in that company sort of could see what I wanted to do and were prepared to invest and help launch the product. So we were fortunate there, that we had some resources there that we can dwell on. So we were always going to bootstrap this company, and to some degree the Australian marketplace and CPG is very different to the US. We don't have VCs and angels sort of running around just throwing checkbooks and money at things, and none of those expectations to some degree. So it was sort of didn't even occur to us to sort of get VC funding or things like that. So we went down this path of sort of, drawing money out and to some degree almost bleeding dry our other company to sort of keep the chips going. As you're very well aware, it's incredibly expensive to get into CPG and food in the US. It's a huge barrier. And so that's why we quickly realized why this whole world of VC funding and all of this existed. And it was a lot of going back and forth between me and the other co-founders when we looked at this of, hey, do we keep doing what we're trying to do? We never wanted to take on funding. We never said we sort of would. Not that we were passionately against it. It was just, it wasn't really an option. We didn't really build it for that way versus, hey, we really think we've got something here. Should we be trying to put the pedal to the metal, try and go hard and take opportunity of something, in which case we'll need those funds to do it. And it took us a little while of going back and forth before we made the decision to say, look, we've got a great funding partner in Circle Up, was one of the original funds that invested us right from the start, and we were able to take some funds and to sort of start to build from there.
Awesome. Yeah. No, it's I think I didn't understand it until I was, in this world, just how expensive it can be to get on shelf, especially in major distribution points. It's remarkable, really. How did you guys, like, when you cracked into the US? I mean, I have lots of questions, but I would love to know, like, what was your plan from a distribution standpoint? Like you mentioned where you're at, was that like your goal, or did you go through online first? Would love to know just like how you guys kind of started it up and how you grew.
And so for this one, we did have a master plan,
right,
and then it all fell over. But at least we came in with the plan this time, right? So we thought, right, well, we've gone through some of those stages. We think there's an opportunity here. Let's do this. So our first retailer was Whole Foods Northern California. So we had about
that was 40 your first retailer.
Yeah, that was it. That was our fourth one. So this is what I mean, Charles. So we sort of had these things to say, look, this is amazing. We should take this opportunity. And so we sort of, everything we've done, we've felt confident taking that next step because we've been very fortunate in that regard. So we thought, right, we've got Whole Foods. Let's start there, and then. The other way you got to be mindful as well is the differences between Australia and the US. So even though Australia is physically the same size as the US, we only have 25 million people. So there's more people in California than the whole of Australia. So that was our attitude going into this was, you know what? Let's just try, once again, downside. Let's just try and get California. If we can just sell into California, we could double our business. It's like another whole Australia there. That's all we're interested in. So we just started off. We got Northern Whole Foods in California, got a broker, then started to fill in around that and do those things there in California. And that plan was starting to work well, and we're getting all the independents up there. And then I got a call from Wegmans to say, hey, we love your product. I'd love to put it in all of my stores. So what do you do, right? You've got this plan of, no, we're going to start in California and just do this.
Well, sorry not to cut you off, but at this point, are you still in Australia, I'm assuming? It's like you're...
Yep.
So
this has all been imported. I was running it from Australia. Up until 2 years ago, I was still running it from Australia. So for the first 3 years, I was running it out of Australia. We had using brokers, and then we sort of, after a year, we hired our first employee and then went from there. So, so we were running it from Australia. We had some help there. And so we made the decision that, let's throw the plan out. Let's go over to Wegmans. We think this is a good opportunity. We'll start there. So suddenly now we're on both sides of the country, and we're sort of trying to go from there.
Another question is like popped in my head as you were explaining that. I think for people who, not worked for maybe a CPG brand before, what was it like from like an inventory perspective? Because I think most people have no idea like what a getting an account like that can do to your inventory, and just like, the number one, the expenses, and then just like preparing and planning and having it ready to go for a Whole Foods, let alone a Whole Foods and Wegmans. So can you maybe just explain to people that process? I think people would really resonate with that.
Sure. It's one of the major expenses that even to this day, to be frank, we have a lot of capital tied up in inventory. And it's something we've chosen, particularly at the moment, to invest in because of uncertainty around supply chain and even spikes in demand and all of those things like that. So that was one of the things that was drilled into me early on when I spoke to people in the US was, do not go out of stock. Retailers will never forgive you if you're out of stock and all of this. So that was like my number one thought. So we, and we were ordering in by full container loads and things like that as well. So it wasn't like we could go to a local co-packer and say, hey, run us off 2 pallets or something like that.
Yeah.
I was ordering by literally the thousands of cases at a time. It's 5,000 cases in a container. So that was sort of a lot of product. So that's also what quickly made us realize we needed funding. So it was a big deal. So it's not only where I need to have the inventory. We've got 60-day lead times at that time we did. So 30 days for our co-packer to make it, 30 days to ship it to the US from Malaysia. Then we've got to sit on 30 days worth of inventory to sort of make sure that we're covered. So we're planning out 90 days of what a retailer is going to look like that we've never sold a single product into, but I have to place orders now to sort of fulfill that. So it was a huge amount of logistical issues that we had to do, cash issues, cash cycle as well, because I'm ordering now and I'm selling it. And as you know, these guys aren't going to pay me for 40 days. The other part of it was, I haven't banked a check in my life until I moved. I didn't have a checkbook till I moved to America. No, I've never heard of checks. Everything's done electronically, all of this. It was one of the big things that surprised me how, no disrespect, but how backward the banking system to some degree is here in the US. And so we didn't have any employees in America. I'm in Australia and UNFI saying, Matt, we've got a check for you. What would you like me to do with it? And I don't. So I put an ad.
What do you mean?
Yeah. I put an ad on Craigslist to say I need someone to pick up a check and go down to my bank and bank this check. Like, that is the dodgiest thing in the world. Thankfully, it worked out. It worked out, and this nice lady in LA for about 12 months would go and pick up our checks and bank them for us.
That's an amazing story.
So
that is amazing.
These are things you had to deal with. So we're working through that. I mean, on a sort of inventory side, when we launched into Walmart 2 years ago, we picked up, or 3 years. It was a national launch. We weren't expecting that, but we were going to 4,000 stores.
Wow. And
so they were telling us, yes, you're approved, everything's fine. The reset date is February or something like that. But because of these lead times, I had to place a PO with my manufacturer and ship it out before I ever even got a confirmed purchase order from Walmart, which is like, that's the big no-no, because retailers are notoriously finicky and things like that. So once again, I had to order, $250,000, a couple of containers worth of inventory in the hope that the Walmart buyer would keep their word and say what they did and will eventually send us a physical PO. So there's been a lot of those sort of freight issues and logistical issues that have been tricky.
Yeah, I mean, I have total empathy for you, because I've been on, like I said, the flip side of getting things out of this country. But for you, I mean, for people listening, that's you would have to you'd have to basically place an order with your manufacturer. I'm sure there's weeks and weeks of lead time there, at least, probably. Then you got to get it on a container, ship it all the way across the Pacific Ocean, get it imported, which can take time, or it can get stopped. And then you got to get it to a retailer. And then once the retailer, has it, then if people don't know, I mean, like, it's not like they pay you once the product shows up. They have, depending on your terms, they can have up to, 2-3 months to pay you back, especially like Walmart. Walmart always pushes for high terms. So, you're talking like months of you have to pay something up front versus getting money back. That's tough. That's wild to think that those were like some of your, like, those are major, I mean, they're the biggest retailers in the US that you're talking about that you guys were starting with.
We've been very, very fortunate in that regard. And that's what's given me, the confidence, even this, to move my family over to the US and to keep doing this. I mean, I've had experience in Australia launching. I've launched over 20 brands sort of and tried to bring them to Australia. So I've had a bit of experience seeing it, and I've seen, and just because something works doesn't mean it always works for things, but I think things that have worked, things that haven't. But one of the things that this really showed to me and to us that we had something here was just the reception we got from retailers. So within 12 months, our first 12 months, we had opened up every UNFI and KE DC across the country. We had retailers ringing us and saying, yep, we want to put this product in. And then when I compare that to Australia, where we couldn't even get on the phone to a retailer, we couldn't even get a meeting with our buyer or anything like that. And here we were in the US, sort of buyers reaching out to us. I just never even saw that. So we thought, look, this is really fortunate. Not all brands, not all products get this. And so we need to really keep sort of doubling down on what we're experiencing.
Totally. So explain that maybe for people too, because I mean, from at least my understanding, tell me if I'm wrong. We hear, at least from like the brands I worked for, we've always considered Australia, you guys are Australians are predominantly are healthy. They're into the better for you wellness brands. If that's the case, what do you think the differentiator was in the US? Like, not to give away your secret sauce, but like what was it that was getting all these major retailers to want you guys so early?
Yeah, so I think there's two things to it. Is one is just the number of retailers you've got. So as I mentioned, we've got literally two retailers in the US that control 80-90% of the market. So
Right.
they have huge power. They're hugely tied into the big corporations and those sort of things. So unless you've got $2-3 million, unless you're sort of something like that, then they're not likely to take you on. They're going to sort of take things on. So that's the unfortunate thing is, whilst yes, we are focused on health, we have better diets, all of those things like that. In my experience, and I think continues to be the case, it doesn't foster as much entrepreneurialism, as much young CPG brands and things like that. There's a lot more weight given to the major companies and the incumbents and things like that. So that's a factor. I think the other factor is just the sheer population of the US here. And so you've got so many retailers, but also, there's huge sizes of these as well. Like, it's not like you've got, 2 or 3 that are massive and then thousands of these little independents. You've got 200-300 sort of retailers that are 50, 60, plus 100 chains and stores and things like that have critical mass that can allow you to establish yourself. Like, we could establish ourselves on 40 Whole Food stores and then build from there, and sort of, if we can get 40, then we'll take it to this guy who's got 80. And then when we succeed there, we'll take it to this guy who's got 200. And then we can take it to, so you can actually get a foot into the market and build it there, which is very difficult in Australia. So I think it's just the way it's set up. And then the third point is the natural industry here. So we don't have that in Australia. We don't have this whole chain of people that only take natural products, or this whole industry that is prepared to give products like us a go. So that definitely makes a difference as well.
Gotcha. Yeah. No, I mean that does all make sense. Was there like a conversation where all of a sudden you kind of got the green light? Like, what, I guess the one piece I want to maybe better understand is initially launching into Whole Foods in the US. When you guys try to like sell in, were you kind of just explaining to them like your success you'd had in Australia, and that was what should like give you the green light and shelf? Like, to me, that feels like such a huge gap you guys jumped. That's so impressive.
Yeah, well, the other factor I should put into this is 3 months into our launch there in Whole Foods, we decided to rebrand and rechange all of our packaging. So we didn't originally launch as the Good Chris Company. We had a brand in Australia called Marmy, and we'd sort of developed. So that was also a co-brand with the co-packer, and sort of part of the agreement with them was, hey, maybe we could do a joint venture, and we could take this brand over and sort of do it in the US together. And so we sort of started to get a bit of traction. We got originally these first 40 stores with this Marmy brand. And then it became quickly obvious that wasn't resonating with US consumers. And I would say to the retailers, hey, look, we're a big brand in Australia. We're a national brand in Australia. We could do this. And they'll say, that's fantastic. Come back to me when you're a national brand in America, and then we can talk about it. So, to answer your question, they didn't care in the slightest about what we were doing in Australia. It had no effect at all. So they said, look, your product's good, your concept's good, but your packaging and your brand is just not resonating. So we had to quickly, once again, make another decision and say, look, let's scrap this whole thing. Come up with this idea of the Good Chris Company, and we did a rebrand sort of 3 months after relaunching. After launching, had to dump all old packaging, switch over to what we did, and sort of go from there. And to be frank, it was one of the best things we ever did. But so that was on top of everything as well.
Yeah, so just a few things going on.
Yeah, that's right.
Just a couple.
That's right.
How did you guys come up with the name of the Good Chris Company? I like the packaging, everything. I love it. It resonated with me when I first saw it.
Yeah, for sure. And this is another. So we then launched with one packaging, and then last year we've done this not rebrand but relook of our packaging, a new logo and things like that, which has just sent us to another level again. It's been amazing. So I'm really happy with what we've done. But originally, trying to think, we sort of were just chucking different names around and trying to think what this was. And I had this idea of, and which was the issue, was Marnie was a brand somewhere, but it didn't mean anything in the US was sort of the idea. So that was, well, how do we come up with a logo that means something? How do we have something that isn't just a good graphic or something that just sits on your packaging that you can build equity around as you go? Could we try and come up with something that actually looked good, but also helped sell and help get the idea across? And we're sort of throwing around ideas, and crisp is sort of a very UK sort of Australian type sort of word. Yeah. And we thought it sounded a bit fancy and things like that. And we thought, well, we like this idea of good. Australians don't tend to talk themselves up too much. So we don't want to sort of be too sort of like, oh, we're the best chip company, we're all of this, but we're good, so this sort of idea, it sits in the middle there, and those three pillars that we talked about. So we said, well, what about the Good Chris Company? And none of us believed that we would be able to get the trademark or that it would be possible, but we thought, look, let's just put it in and see. And amazingly, it was. And so we locked that down, and we didn't even sort of think twice about anything else and just ran with that. So it was just sort of, that was the process, and a bit of good luck having it available.
Love it. No, sometimes it's what it comes down to, right? A little bit of luck, like you said at the beginning, a little bit of, right place, right time. That's sometimes the biggest thing. No, that's really cool. How has, so for you guys, it sounds like retail has been, a major focus, a huge avenue for growth. Do you guys have a big e-commerce presence, or has, D2C, B2B, e-com, all that kind of world, has that been something that you guys have focused on? And then like part two would be just like, what happened, I guess, what happened with all of these channels during COVID in 2020? So curious on like how you guys maneuvered through some of that.
Sure. So, excuse me. Sorry, something throat. So, we're 90% online, but in store versus online. So D2C has not been a big sort of part of us, and part of that has been just scrambling. We had such a great response from physical retailers, and just sort of trying to keep up with that and all that. We sort of didn't, sort of want to necessarily go into direct consumer just yet. But in end of 2019, as part of our rebrand, we all redid our website and Shopify and built it up and started to sort of make that a focus. So we were starting from scratch from there. So thankfully we got in just before sort of COVID, and that all ramped up. So we weren't now trying to sort of do a website or something like that and miss the boat to some degree, but we didn't really have anything there. So it has been a really steep learning curve for us as we've tried to learn and to make it work. We had some issues around our packaging and breakages and things like that as well fairly early on, as UPS drivers sort of just chucked our product around, and it shakes inside the can and breaks up. And so that's been a challenge for us as well. So we've been doing a lot of groundwork over the last year and getting a lot of things right. We're sort of 5 or more than that, 10x our D2C business in the last 12 months, as I say, starting from a very small base, definitely, but that's growing, and it's certainly will become a larger part of our business. I think to some degree it's always going to only be about 10% of our business, but as we grow bigger, that 10% will represent millions of dollars. So it's a factor. It's something we're working on, and we think there's a lot of opportunity as well as what we're doing sort of with our retail partners. So that's sort of where it is. And then as a result with COVID, it's been a bit of a mixture. So a mixture of things that have helped us. So COVID has definitely been a tailwind behind us. People are at home, they're eating chips, they're transferring their purchases from sort of, 7-Eleven or the deli bar or whatever, and buying in store and grocery, which is predominantly where we are. So like everyone, we saw those big spikes in March, and that sort of continued. And then just after that, we launched our new packaging, and that's been the 1-2 punch, to be frank, that's sort of done it. And our packaging has really then catapulted us from there as well. So we've had more people looking for snacks, and then in that environment, our new packaging has stood out. So we've had more people picking us off the shelf, And then our quality of products has meant that we've had more people going back to sort of buying us again. And those three sort of things has resulted where, 200-300% up on last year of our business, and month on month we're continuing to sort of grow. And so we're seeing that it wasn't a COVID spike and then it's sort of come back. It wasn't a packaging spike and then gone back to normal. We've been fortunate where that's continued to baseline has just continued organically to grow and to increase. So, it's been a difficult year for a lot of people, and we're very obviously sympathetic of that and understanding, but sort of specifically for our business, it has been a good year.
Yeah, congratulations. That's exciting to hear, especially when, a lot of brands aren't doing well. It's great to see the ones that are doing well in this whole environment. With, it sounds like explosive growth, lots of distribution. How big is the company now? Like how big headcount wise are you guys at this point?
Yep. So we, for a long time, there was just a couple of us. So we're now, we hired another VP of operations last year. So that was our latest hire, which brought us to 5 people. And then actually at the moment, we're now put out an ad, we're looking for another sales person. So there's 6 of us. So we're still a relatively lean team. So we sort of rely, we have a great broker network. We have great sort of partners that help us, that allow us to sort of, still be in, nearly 10,000 grocery stores, but not needing to have as many staff. But we're starting now to build that out and help to continue that growth.
Yeah, no, that sounds awesome. I mean, that's pretty impressive to have that kind of distribution and have such a lean team. That must go to show the hard work that you guys are all putting in. That's pretty wild.
We do have a good team. We have an awesome, everyone says it, but I definitely feel that we have an amazing team, which is makes all the difference.
The people, man, I feel like that's always the most important thing. No, that's exciting. So you guys, correct me if I'm wrong, you have 4 flavors today?
We had some more, so we launched some more. So original and sour cream are our sort of OG. So they're the first 2 that we launched with. Then we launched another 3. So we have Outback Barbecue, sea salt and vinegar, and aged white cheddar.
Wow, nice.
So they're out. And then we have, so they're in our larger 5.6, and then we have like a 1.6 ounce smaller sort of snack packs. We do that in original, and then we brought out some multi-packs and things like that. But the five core flavors at this time.
Love it. And so and you don't have to give anything away. Obviously, this is what I was talking about before we were going, but what is it sounds like you guys have just been hitting the ground running. You guys are growing like crazy. And this is maybe something you don't think of too much, but what's the next, year, 3, 5 years look like for the Good Crisp Company if you had a guess today? We
think about all of those things a lot. So for sure, it comes back to it, like, what are we as a company? What are we as a brand? And I don't see us being, hey, we're a platform brand. We can take the Good Crisp Company all over the store and all of those things like that. That works for a lot of brands. But personally, I think, what do we actually bring value for? Like, we've seen it where we've been able to provide a really good product, and we've seen retailers and consumers respond to that. So how do we sort of replicate that? So for me, I think, okay, our core sort of demographic at the moment is families, is kids 5 to 10 are the major sort of eaters of canister chips. So we've got that core market. Can we maybe bring in some other more premium flavors potentially that bring in that older demographic, or those people that have, millennials that have moved away from canister chips? Can we sort of bring them back into the category there and do that? So we've got some ideas around that. And then we've thought, well, are there other potential products in canisters maybe that hit our market that could be of interest for our consumers as well? And so we're exploring a couple of options there. So I think we're always going to be in the snack aisle. We're always going to hit that core sort of demographic, but maybe there's some other things we can do under the Good Crisp Company.
Love it. Yeah. So really keep focusing in on chips, on what you're good at, and kind of drilling down deep into that. That's awesome. It's funny. Honestly, that's not, I would say, and you probably have known this just from your Australian business, but I feel like so many brands today want to be the platform brand. I feel like it's like the new kind of cliche thing to not cliche. It's probably a little bit of a generalization, but it seems like so many young brands want to be all over the store.
Yeah, and I think there's a couple of factors. I mean, and I sympathize as well. We're an investor-backed company, and there's pressure. There's pressure to continually bring really high returns, to continually, double your business every year or bring in substantial growth. And some of the easiest ways to do that is to keep launching new flavors and new products and step out. And then as you start to cannibalize, you realize that process doesn't work anymore. So, all right, let's try and launch some new products over here where we won't cannibalize. And so I can understand sort of the mindset behind it. And equally as well, a lot of brands do transfer over really well. And there's some great success stories there, but it can be a really difficult challenge. And so for us, we think, no, let's know what we do really well and just go really deep and really just focus on that. I mean, as I said, Pringles is a $1 billion brand and they just do canister chips. So, there's a lot of area still for us to cover.
Definitely. Do you have any suggestions for, young entrepreneurs or just any entrepreneur out there that, wants to start a food brand? You've had a very unique way of coming to market in the US. Specifically, like, I think it'd be interesting to get your perspective on, bootstrapping versus raising money.
Yep.
Do you have any suggestions or perspectives for people as they think about, starting a business?
Yeah, I think particularly on that bootstrap to raising money thing, I think it's a combination of both. Like, I think particularly in CPG, particularly nowadays as well, the market shifted sort of post WeWork and all of those things, that there's not as much money slosh. So the money's there, but it's not as sort of just being dealt out as freely. So you have to have some proof of concept. You have to bootstrap something. You have to get out there and have a viable product and show sales and show velocity, show good margins, all of those things before you can even look at venture capital. So it's not sort of a either or situation. I think it's just a stage situation. You have to bootstrap to start. You have to build up a concept. You have to do the farmers markets. You have to do those, whether for us it was 40 sort of California stores, but whatever it is for you, if it's, 1 or 2 local independents, whatever, that's part of it. I think what does make things a bit easier for people these days is the D2C model. And that's sort of, once in a lifetime sort of, we just skipped over the last 10 years and have already arrived at what D2C is now. So I think that's a big opportunity to focus. That said, it comes with its own challenges. It's not like, oh, I'll put a website up and now I can suddenly sell to everyone. No one's randomly typing in thegoodchriscompany.com to see what comes up. Like 100%. It costs me a lot of money to get them to come to my site and buy. And so yes, I can charge more because it's direct to consumer, but it's a little bit of a fallacy, that the margins are not necessarily there because there's a lot more costs involved in it as well, and advertising and things like that. So I think, but still, it's a good place to start. You can build a community, you can niche down. That's something that I've learned over the last year or two. Sort of when we started, we said, right, let's pick some attributes. We're gluten-free, right? Let's go after our gluten-free market and really do that. And we grew up. We had a great Instagram following, our engagement was awesome and all those things. And then I started to think, well, we're not just for gluten-free, we're for everyone. We should be targeting everyone. And we started to really broaden our approach in that. And we saw our engagement, we saw our CAC and everything like that really start to our engagements go down and our costs to go up. And we realized that you need to niche. So yes, we can still appeal to everyone, but slice that up into niches and find that audience, find those people that are passionate about you and build that story. And then once you do that, you can start to then look for some VC funding, whether that's friends or family and things like that, and go from there. There are brands that do without VC funding, and I could probably list them off, maybe on one hand. One company sort of there I assume you're in Chicago, Chomps is an amazing example of that in their Better For You jerky. And I look up to those guys and in awe of what they've been able to do with sort of the resources that they have. But they're few and far between, I think. And so it's not impossible, but I think realistically, just CPG is incredibly expensive, and to capitalize on growth and to do it properly, I can't see many ways of doing it without funding, to be frank.
Yeah, no, I mean, it makes sense. That was a great overview. That's a great advice for anybody who wants to get into the industry or not, or get started. So thank you for that. That's really great. And it's expensive, complex. There's like so many. What I think is so interesting is there's so many different ways to go about it. Like RX, for example, we built a B2B and B2C and really e-commerce beast. And then that kind of unlocked distribution. We had the big boys wanting us at that point. But it's cool to hear your story. I mean, there's other ways to do it. There's not one way to get into it. And I think that's why this industry is so interesting.
It is, and not to, and I guess the flip side is not to scare everyone else about all the negatives. The positive is I've never been in an industry that is so giving and opening and understanding and all those things, and so much willingness to help individuals as well. And so there's a lot of pitfalls, there's a lot of ways of doing it, but there's a lot of people that are willing to tell their story and to help and to be frenemies even to some degree, but mostly just sort of, hey, look, you're doing it. This is what worked for us. Try these guys. Have you thought about this? And that it wouldn't be possible to survive in this industry either without that. So as much as there's all the challenges, the offside of that is there's so much support and help and infrastructure. It's incredible. And that makes it all possible, I think.
Definitely. No, and to build on that, I appreciate you taking the time to do this, because this is, you know, you're given time today to make the connection and have this conversation. It's been great. I think yeah, I've worked in, you know, essentially the 3 different companies I've worked at have been 3 completely different industries, and I'm agreeing with you. The CPG industry, especially food, is just, I don't know, people are just willing to talk to each other, help each other. I think it's one of the few industries where people realize at some point that you know, more than one person's going to win. You look at it in a grocery store, there's so many brands. So, you know, if you have a good product and it's something you believe in, you have good people, it's, you know, then it comes down to a lot of hard work.
Definitely. And as well, I think it's also about the industry winning. Like, I think people look at it as an industry as a whole, as opposed to sort of me winning. Like, if natural foods wins, America wins, we all win to some degree.
Right.
Whether my brand is sort of a winner of that per se or not, but if I can boost you up and overall you can help sort of improve the diet and improve people and improve life in America, well, that's an amazing thing as well. So that's one of the great things about this as well.
Yeah, I totally agree. That's awesome. All right, I know we're getting close to time, so I ask a few questions to every founder on here that I'd love to ask you. One being, and maybe also with something different that we haven't heard on here before because of your background and where you grew up. But if you had to gift, I always lead with book. So if you had to gift, you know, your favorite book, it can, if you don't have a book, if you're not a reader, it could be a podcast or, you know, some other source of knowledge. What would that be for the audience?
That's an interesting one. At the moment, actually, so I have a Christian faith, and I've been reading through Proverbs as part of that, and just looking at that from a business perspective, and it's actually been really amazing. So there's actually huge amounts of advice and things that are so applicable in business and doing things ethically in the right way and for the long term and things like that. So that's one that springs to mind. So I've been looking at that sort of each month. So that, I think, is a lot of wisdom in that.
Love it. That's one we have not had on here before. So that's great. That's awesome. This is one of my favorite questions. This is a little more tactical. So, obviously, you know, you're leading a company. There's tons of things on your plate. I'm sure you're also married. You have kids. So I can only imagine the amount of just things that you need to get done in a given day. Plus you have big, broad goals, I'm sure, for the company. What tools do you use to, you know, set goals, accomplish daily tasks? Are you a pen and paper kind of person? Do you use apps? Just love to ask, like, how you get your shit done.
Yeah. So fundamentally, I'm a pen and paper person. I'm trying to work on that. So I find Evernote to be a lot more helpful, particularly, I mean, it's not so, I've gone back to pen and paper now because I can't get out and about as much and I'm always at my desk and things like that. But particularly I was out and about and traveling and things like that, you forever don't have the piece of paper or the pen. So Evernote for me has been just a more high-tech version of pen and paper to be essential. So I'm big on lists. I make a lot of lists. I cross things off. There's that sort of good feeling of crossing off, but It just helps to keep things organized. I always have random ideas popping into my head and then are quickly gone. So if I can jot them down, that's helpful. So I'm not overly technical. I like tech and all of that, but for me, I think that's just sort of been one of the biggest things that's helped me.
Love it. Yeah, I know. There's something about pen and paper. Last year I really got back into, like, I don't know if you've ever heard of it. It's called like bullet journaling. I tried that for a while. I use something now called a full focus planner. There's something to me about writing it down on paper and checking it off that's invaluable. It takes a little more time, but I feel like you can prioritize better.
I agree with that. I think personally, I'm quite dyslexic, so sort of getting anything too technical is difficult. So just sort of getting something down to at least I remember it and it jots things off and things like that, I find is just whatever's the quickest and easiest way to do that.
Right. Yeah. No, that totally makes sense. That's fantastic. I totally agree. The last question and the most important, how can people follow you? How can people find the Good Crisp company, and how can people get involved with the brand?
Definitely. Well, Instagram, the Good Chris Company, is a handle there. I'm on LinkedIn, and Matthew Parry or Matt Parry, probably it is, but you can find me there. Definitely reach out. Actually, I just got onto Clubhouse, so I'm doing some more of that. So
Oh, nice. I
if
just
you're on
had,
there
so
you go. Look
funny
me
enough,
up.
I just had a coworker that sent me that. I'd never heard of it
Uh,
before, and he was sending me stuff about podcasts, and I was like, oh, this is really cool.
Yeah, it is. It's like I said, it's a cross between a never-ending podcast, a sort of talkback radio to some degree, a modern version of talkback radio, and sort of then being able to sort of eavesdrop into awesome panels. So it's pretty good. I have it on most days and do things. So I'm usually there, so hit me up there or on LinkedIn.
Awesome. Very cool. Well, Matt, thank you so much for the time. This has been fantastic. I will add all the links to the Good Chris Company and get all those in the show notes. And hopefully people check it out. And good luck with 2021 and the growth of the brand. And we should stay in touch. And hopefully everything goes well this year.
Absolutely. Thank you so much. I've really enjoyed it, and definitely we will be keeping in touch, and make sure you send me your address so I can get some more product to you. And
All
that goes
right.
to anyone. Just hit me up if you need samples.
There we go. Love it. I'm sure people will. Awesome. Well, Matt, thank you so much. And we'll talk soon.
Thanks.
Awesome. Thanks.